it's time to focus on a couple of more trading ideas. We have Shubham Agarwal joining in with that. A couple of F&O trades coming your way. Shubham, good morning. What stocks are you focusing on?
Hi, good morning. So basically, if we look at the overall market, the market seems in a consolidation which might continue for some more time. So both opportunities, long and short, exist. So the first stock idea is a buy call on L&T. And if you see the entire sector performance and the stock performance has been quite encouraging. And after hitting the all-time high, it looks like that there's a temporary consolidation. And we expect one more leg of upside to be seen in this expiry itself. So a bull call spread can be initiated at the current level. The trade would be to buy 1540 call option one lot and sell one lot of 1580 call option. The net spread is at 11 rupees 35 paise. The target for the same will be 20 rupees and a stop loss can be maintained at 6 rupees. The second call is a buy call on PFC, and there's some interesting data point on the options front. Because if we see there, technically there is a continuation pattern that has been formed, and yesterday we saw a breakout. And on the options front, we have 130 strike call option, which is heaviest, and the stock has closed around that area, which is an area where generally we see an OI breakout. So it looks like that today could be an encouraging day for PFC. So a simple long call can be initiated. 130 strike call option can be bought for a target of 5 rupees and a stop loss of 1. And lastly, one sell call on Jindal Steel and Power. And if you see there, very similar setup. We have the highest put at around 140 and the stock is trading around that level. So very good possibility of we witnessing a breakdown. So 140 put can be bought for a target of 5 rupees and a stop loss of 50 paise.
Okay, Shubham, thanks a lot for all those trades. Let's move on then and address the market fundamentals. Prakash Diwan is now with us. Prakash, hi, good morning. Your thoughts first on a couple of these, interesting stocks where we've started to see some bit of bounce back. Let's in fact start with UPL. What's your call on the stock?
Yeah, so I think what's happening is that this whole debate on quality and corporate governance, promoter pledges, leverage, brought some of these companies which had kind of risen pretty sharply, and UPL was one of those. From January, if you see YTD, we already had a little bit like a 30% kind of an upside. The correction seemed imminent. The market was waiting for a trigger, and when the tsunami hit the markets for some of these doubtful names, a lot of these overripe stocks also kind of led to this correction. But the fundamentals catch up, and that's exactly what's happened to UPL. It's fundamentally strong. It's in a great phase. And I can tell you globally, the kind of acquisition, apart from, of course, Arista acquisition, there are lots of other drugs, chemicals that are going off patent this year particularly. And if they were to acquire those, the kind of repertoire they will end up owning for the cost that these things are available, especially in Latin America and Europe, it's going to be fantastic. So I think it's in a very steady state. It will probably see some momentum come back, and you could see another 10-15% upside very quickly here.
Okay, Prakash, hi, good morning. I wanted your thoughts on how one should approach Emami now after this whole issue. I know you've spoken about it in the past, but it's the fundamentals don't seem to have a problem. It's just that what's happening with the group debt and the fact that the company is selling their family silver is something that's concerning the street. But for an investor who is perhaps stuck with it for the longer term, should you worry?
Not really. Because see, let's look at what is the reaction to. The reaction was to the very clear acceptance, Sonia, that there was an issue, there was an overhang on this pledge part. And the company and the group as a whole has made some wrong decisions in terms of investing into assets which probably haven't paid off the way they were expected. Particularly, I remember one case in point is the hospital business, which they've acknowledged. And some of the brand acquisitions probably seem, in hindsight, seem a bit expensive. But then that's part of management decision making, which happens to everybody. But what they've done is they've immediately gone out, repaired the damage, and then got out of it so that they don't get into a situation like what we have in Z, where you keep on dragging the thing and kicking the can down the road, and then that overhang in fact damages the texture of the stock much worse. But here, I think the fundamentals will catch up, and then they're cyclical to a large extent within the FMCG pack, as compared to some of the other more diversified product plays. So here you would probably see benefits coming in the second half. So I don't think you should be worried. Yes, the damage is severe. 13%, 2 days is not something which is very easy to explain to any investor. But a long-term investor should definitely keep the faith right now.
Okay, long-term investors should keep the faith. Well, a lot of brokerages are not keeping the faith. As such, Citi has cut their target price to 340 versus 435 earlier. But on that note, let's listen in. Emami, remember, as we said, has sold 10% promoter stake in an attempt to pay their debt. Let's hear it out from the management executive director, Mohan Goenka, on what the plans are going ahead.
We have sold about 10% today. This has been sold by the promoters. This is primarily to reduce our debt. This would go entirely in reducing the debt. The buyers have been some of the marquee investors, both domestic and foreign institutional investors. This is absolutely the last tranche. The idea is definitely to reduce our debt, but after this we would be in a very, very safe position. I don't think we would need to dilute any further stake in Emami Limited. Total debt, as far as the promoter debt is concerned, our debt was almost 3,300 crores. After this stake sale, we would further reduce it down to about 2,200 crores. And our idea is to further reduce the debt in the next coming months. We want to absolutely reduce it to negligible levels. After repaying our debt, the pledge would come down to almost 37%.
It's just astounding how the names keep changing. The story is still the same. Z Group, Generigation, Emami. And Prakash, good morning. I'm coming to the next one. Piramal Enterprises. Now, we're not sort of assuming or alleging that there is a massive debt issue over here. But the developments of the last couple of days tell us there's a reason why stakes are being sold in, some of the best Shriram Group companies, for instance. Piramal Enterprises, the stock, what would your recommendation be now?
And so, this is an interesting play. And I don't think it's very easy to kind of paint it with the same brush for two reasons. The fact that Piramal is cut from a different cloth is here, the investments into Shriram were not part of the core business. The core business, as the company very clearly said, continues to be lending. And that book, which we don't know much about in terms of the real estate play there. But that book could probably have certain, stress levels and stress points. And all this money that's coming back is only going to shore up their, solvency and liquidity issues. So, the fact that the promoters have gone out, done this, because they've not seen value getting created for such a long time in some of the investments, and it was a portfolio investment at the end of the day. They made money in most. This one didn't play out as expected, so they've got out of it. Now, having said that, whether Shriram was a good bet and, they should have got out, they should have waited, those are different issues, managerial decisions. But I don't think Piramal Enterprise would have issues because they are still attracting a lot of capital from deep-pocketed investors. And we've seen that. And if that were to happen, I mean, they're talking about getting into fintech, which is with one of the biggest funds globally. And if those kind of things were to happen, there'll be a repair which will be very, very quick. And it's more sentimental at this point in time, but I don't think the damage is operationally very deep.
Okay. Well, I also wanted your thoughts on what's happening in the auto space. I mean, there's deep trouble there, right? On one hand, dealers are just not getting any finance, NBFCs are not lending. On the other hand, now there's this talk of banning of the ICE engines, etc. You think it's going to go from bad to worse for especially the two-wheeler makers, Prakash?
Sonia, it looks like a very knee-jerk reaction. It's suddenly Niti Aayog gets up and says, you got guys 2 weeks to plan this thing out. And of course, the debate is that it might take 3 to 5 months to plan. So here we are talking about putting a plan together, but the government also needs to plug a lot of other gaps. And I think that the policy holistically needs to become much more pragmatic, whether you want to do it across the country, you want to do it in tier A cities, which are actually facing a lot of issues related to pollution, make it more viable. We are struggling to have electricity reach so many smaller towns or have electricity full time in smaller towns. And then you're talking about completely banning ICs. It doesn't work so, simplistically. So my sense is there will be a respite. It's just that there's a little bit of a pressure to get these two-wheelers to start acting. The positive thing about this entire landscape changing so rapidly is that it's no more 2022 that you will see this adaptation happen, Sonia. So the EV infrastructure is where I think you could bet on, charging companies which are making cables, wires, variable drives. That's the pocket that you should look at, but everybody will have to rush to them.
Okay, all right, Prakash, just hold on. More questions coming your way. But right now, let's just quickly go over the monthly telecom subscriber data that was released yesterday. Sonal has those numbers for us. Sonal?
Thanks a lot for that, Surbhi. Well, yes, it was reported during market hours yesterday, but quickly running through the numbers. Overall, the telecom industry has added 8.6 million broadband subscribers, which is the lowest in past 12 months in the month of April 2019. For Jio, they have added 8.1 million subscribers. That is second lowest since January 2018. That is because the rural subscribers, they have been lower at 3.9 million. However, the urban addition has been strong at 4 million subscribers. Moving on to Vodafone Idea, they have lost 0.6 million subscribers. That is the highest since they have actually merged, and this is the first decline in subscriptions that they are seeing since the time they have merged. Moving on to Bharti, they have added 1 million broadband subscribers versus 2.5 million addition that they saw in the month of March. That is also below Jeffrey's expectations of the quarterly run rate. Overall, Jeffrey says that they expect Bharti and Jio to remain focused on subscriber addition, but they also expect pricing to remain subdued in next 9 to 12 months. They believe that price hikes are unlikely in financial year 2020, and they expect 40% plus market share for Jio in FY21. However, they expect Vodafone Idea's market share to fall below the 20% mark in FY22, but Bharti's market share to remain steady at around that 30% mark. But overall, they expect competitive intensity in the overall sector, and that's why they're expecting more pressure in the postpaid segment. Back to you.
Okay, thanks a lot, Sonal, for that. So, Prakash, your thoughts here? I mean, it's nothing new. Competition is going to go up. There's pricing pressure. But there, the expectation is that Jio would have 40% of the market in the next 1 year. For Reliance Industries particularly, do you expect more upsides?
So the base has been set, and 40% is as good as it gets in a business which is so competitive. And the fact that they've not had to bleed so much to reach this level gives them the advantage to get into operating leverage faster and in a very efficient way. But they will have to raise money, they will have to reduce debt, and I don't know, I keep on reading about this potential IPO in the next 12 months. And if that were to happen, some of the profitability metrics will have to improve, which means they will have to hike prices, and then that could be a relief of sorts to the other two players. But I think the stock is right now available at a level where Jio is not again being factored in completely. So if it were to move back to that 1200 zone, it's already lost about 10%, I'd noticed, but from that 1200 zone, it could again move back on the back of some positive announcements in Jio. So I'm quite constructive on the stock. The refining business is where the core business is where there's been disappointment, but retail and telecom for Reliance could actually do the trick, and quite positive that Jio could spring a couple of surprises in terms of walking that path very effectively going forward.
Okay. All right, Prakash, stay on. We need to take a break. By the way, the fall in some of the Asian markets is now accentuated. The Hang Seng, for instance, is down almost 1.5%. China, Nikkei, most of these markets are lower, as is the SGX Nifty. That's the Asian screen all red today. We'll take a break and come back with the pre-opening rates.